Welcome back to the channel, Financial Educators. Today, we're diving deep into a fascinating microcap stock that has recently caught the eye of our hard-to-borrow screener, DSY. This isn't just about high fees, it's about understanding the unique dynamics of thinly traded, hard-to-borrow situations. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk about DSY. As a microcap company, DSY operates in a segment where information can be scarcer and liquidity, as we'll see, can be extremely tight. The estimated float for DSY stands at a relatively small 1.3 million shares. Now here's where it gets particularly interesting. In recent trading, DSY has shown 0.0% change today, 0.0% over the last 5 days, and 0.0% over the last 30 days. And here's the kicker, recent volume data shows 0 shares traded today with 30-day average volume of 0 shares. This indicates a stock that is currently experiencing virtually no trading activity, making any borrow market dynamics even more significant. What is cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB? Geographic CTB definition, simply put, it's the annualized interest rate that short sellers must pay to borrow shares they intend to sell. Think of it like renting a car, you pay a daily fee. For short sellers, this fee is critical. A high CTB indicates strong demand from short sellers to borrow the stock, or, more often, a severely limited supply of shares available to borrow. When the demand to short vastly outweighs the supply, these fees can skyrocket, often exceeding 100% or even several 100% on an annualized basis, precisely because short sellers are willing to pay a premium to hold their short positions. Why the stock is hard to borrow right now? DSY has landed on our hard-to-borrow screener for some compelling reasons. The current cost to borrow fee for DSY is an astounding 701.7% annualized. Highlights CTB. Not only is this figure exceptionally high, but its momentum is also significant, with a plus 42 percentage point increase over the last 5 trading days alone. This sharp rise in CTB is a strong signal that something is shifting in the borrow market. Add to this the fact that there are only 10,000 shares currently available to borrow against an estimated float of 1.3 million shares. This tiny supply relative to the float, combined with the soaring borrow cost, indicates extreme difficulty in establishing new short positions or maintaining existing ones for DSY. Despite the lack of recent trading volume, these borrow market metrics for DSY are screaming tight. Squeeze mechanics explained. For those new to the game, a short squeeze occurs when the price of a shorted stock rapidly increases, forcing short sellers to buy back shares to limit their losses. Show animation, squeeze mechanics. This buying frenzy further pushes the price up, creating a snowball effect. In a situation like DSY, where the cost to borrow is extremely high, the supply of borrowable shares is minuscule, and the float is small, the conditions for squeeze can be potent. Short sellers in DSY are currently paying a very steep price to maintain their positions. If any positive catalysts or significant buying volume were to emerge, even small amounts given the illiquidity, short sellers could face immense pressure to cover, potentially leading to a rapid price surge. However, it's crucial to remember that a high CTB does not guarantee a squeeze. It can also signal strong conviction from short sellers who are willing to pay high fees because they believe the stock is fundamentally overvalued and will eventually drop. Dilution risk check. One critical factor that can negate a short squeeze thesis is dilution. Geographic dilution explanation. Dilution happens when a company issues new shares, increasing the total number of outstanding shares. This can offset a short squeeze by providing more shares for short sellers to cover with, and it reduces the value of existing shares. For DSY, our dilution risk check found no recent dilutive SEC filings such as SMINUS-1, SMINUS-3, or 424B in the last 90 days. Additionally, there has been no recent reverse split found for DSY in our look-back window. This lack of recent dilution removes one significant headwind that often plagues potential squeeze candidates. Again, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given DSY current state of virtually no trading volume, the primary thing to watch for is any change in the dynamic. To chart, DSY blank chart with CTB overlay for DSY. Any sudden influx of trading volume, even seemingly small, could have an outsized impact on price due to the extreme liquidity and the incredibly tight borrow market. We'd also monitor any shifts in the cost to borrow and available shares. Our internal composite squeeze score for DSY currently stands at 41.2 out of 100. This score indicates a developing situation with notable short squeeze potential, primarily driven by its borrow market dynamics, but the lack of current trading action makes it a unique and speculative scenario. Keep an eye out for news, filings, or any spark that could ignite volume for DSY. DSY presents a fascinating case study in the world of hard-to-borrow stocks, where extreme liquidity meets soaring borrow fees. While the current lack of trading volume makes it a very unique situation, the underlying borrow market metrics and annualized CTB of 701.7%, a tiny 10,000 shares available, and a small 1.3 million share float certainly paint a picture of significant short pressure. Remember, this is about education and understanding market mechanics. If you found this deep dive into DSY insightful, please hit that like button, subscribe for more unique market analyses, and let us know your thoughts and questions in the comments below. We love hearing from you.